We are on video number 14. I'm pretty sure. Hold on. Gotta do a little check on the YouTube. I think we're on video number 14. Yep, we're on video number 14. So, in this video, we're going to be going over equilibrium. I just want to go over what equilibrium is and how to identify it in this video. And then we're going to do a part 2 like we did with the fair value gaps. Just to make it a little bit more simple for you guys to understand. And just again, we're not trying to rush the process here. We're just trying to help you guys learn everything to the way I learn it. And again, this is the way I trade. We have sometimes some people just want to say stuff on social media and just say things are stupid and blah, blah, blah. Again, if you don't want to watch the way I trade or don't want to learn the way I trade, get moving. That's all you got to do. I'm not forcing you guys to watch this shit. Again, this is the way I trade. It's what works for me. I don't give a fuck on the way you trade or whatever you learned or whatever the hell you're doing. I'm going to do what works for me and what's making me profits. You can talk all the shit you want, but again, if you don't like the way I learn, keep moving. Don't watch my videos. Go watch someone else, and then everybody's day will be okay. Cool? Awesome. But getting that out of the way, what we're going to do is go over equilibrium. I already have the definition written out for you guys. You guys should write this down in your notebook, and we're just going to go over what equilibrium is, how to identify it, and then in part 2, we'll go over how to use it in the charts with the candlesticks. So we'll hop right into it. Okay, you guys should be able to see this. All right. Okay, so the definition of equilibrium, and again, I wrote this out for you guys, and I just copy and paste it, so you don't have to see me type and spell everything wrong, because I'm not the best at typing. All right, quick. But in trading, equilibrium is the midpoint, so the 50% level between a swing high and a swing low. It's how I measure whether price is at a premium above the 50% level, meaning more expensive, so that's if we're in an uptrend, or at a discounted below the 50%, meaning cheaper within that range. Whether I'm measuring from the swing low to the swing high or the other way around, the concept stays the same. It's all about seeing where price sits relative to the 50% mark. We'll put this up here. Let's not go over this yet. I want to just talk a little bit before we go over the second part. But again, with equilibrium, guys, if we are in an uptrend, right? Let's just go like this. Let's do this for you guys. Make it easier. So remember, we are in an uptrend. We are forming higher highs and higher lows, correct? And that should be good. Okay, so if we are in an uptrend, correct? We're forming higher highs and higher lows. What we are going to do is we're going to grab the GAN box here, right? You guys should be able to go over in your tools over here on the left-hand side. You guys can't really see that. Here, I'll move the screen for you. Hold on. Look. Hold on. I'm in the way. You guys should find the GAN box somewhere over here in your tools. Not in that one. Hold on. Which one is it really in? I don't know. It's saying it's up here for me. Yeah, where the fib is. So the GAN box right there. And I'll actually, let's put this back. Boop, right there. Let's give you guys my settings real quick. If you guys want to look at my settings for my GAN box, here they are. Screenshot them. Whatever you want to do. Make it whatever color you want. Write it down in your notebook. This is my settings. Okay? Pretty simple. Got it? Good. Awesome. Bang. Delete. Alright, so if we are in an uptrend, we are forming higher highs and higher lows, correct? What we are going to do if we are in a bullish trend, again, we're just going over how to draw what equilibrium is. We're going to use the GAN box. And if we want to look for a continuation in an uptrend, and again, that's where the second thing's going to come in. Equilibrium is used as a continuation confluence to help us see where price wants to continue in a certain direction. So again, we're just not taking entries off of equilibrium. Remember that. We're going to go over there in the second video, but again, we're using this as a continuation confluence, like a fair value gap or Fibonacci, and then I use equilibrium. One of the three. If you have all of them combined together, that's even better. But again, we're going to be using equilibrium after we have, let's say, a liquidity sweep, then a break of structure on the 5-minute. So let's say we have a high time frame liquidity sweep, break of structure on the 5-minute. We want to look for a retracement into equilibrium. We'd scale down to the lower time frames, look for a retracement into equilibrium, and then get our entry and blah, 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 so on and so forth. And again, we're going to do a strategy creation. So just, I'm trying to get an example out there, so don't freaking try and put that into your trading yet. We'll go over all that stuff in the future, I promise. We have a couple more videos we need to make. We have like a bunch more videos to make to finish this 2.0 series. But again, let's just stay on track, learn everything step by step, and go from there. But again, we're trying to use this as a continuation confluence. So let's say we are in an uptrend, correct? What we're going to do with the GAN box is we're going to mark, let's say we created this high, then this low, then we created this high right here, right? Let's say, you know what? Let's just do this. I don't want to confuse you guys. Okay, right there. All right, so let's say we created a low and a high, right? If we're moving in an uptrend, we consist of higher lows and higher highs, right? So we would think that if price is going to continue in an uptrend and we have our draw on liquidity above, we want to see an entry we can get on price coming back down so we can get a cheaper price for us to get a better entry for when price pushes up in the direction we expect it to go, right? Because we're thinking it's going to continue in an uptrend. So where we would mark, we grab the GAN box, we'd go from the swing low to the swing high, correct? So when we do that, right, we want price to come back down into equilibrium, and equilibrium is the 50% level. So this level up here that you guys see, right here, this is going to be premium. So we'll put a P up here. This is premium, and this is discounted price range. We'll put a D right here. Right? Premium is the top, discount is the bottom when we are in an uptrend. So what we want to see is we want to see price come back down into discounted price range. We want to see orders being filled. So let's say price comes down into here. We want to see orders being filled, showing us buying pressure out of this area, correct? Showing us that, hey, people are filling in more orders in discounted price range, getting it at a cheaper level, showing that price is most likely going to continue in an uptrend. Showing us that to identify that, hey, this is probably a good spot to enter. This is where we're probably going to get our best entry based off what we already saw to get this bias. We're going to end up entering at this point here when we see a candle closure above the 50% level. That's the wrong one. Here we go. Let's make this a little bit smaller. And then we'd end up targeting, again, we're not going to go over stop losses and take profits, but let's say we got our candle closure right here. After going into discounted price range, we'd get our entry, and then we'd target whatever our draw and liquidities are above, and we're going to go over take profits and stop losses in the future. We're just focusing on identifying what equilibrium is, right? So again, let's just go over how to identify it, right? And we're using this as a continuation confluence, again, guys and girls. Let's see, hold on. See, this is why I don't type shit, because it takes me, excuse me for my language. I gotta stop swearing, because I don't know. Let's just, gotta stop swearing. It's not good. But look, again, let's go over, we're in an uptrend, right? Forming higher highs and higher lows. Let's just go over how to use the GAN box. We're gonna go into part 2, using it in the candlesticks, but again, just want you guys to learn what this is, the definition, and how to identify it. So again, if we wanted to mark out equilibrium, we would go from the swing high, grab the GAN box, from the swing low to the swing high. Bang. 50% level, right? So we see price come down into discounted price range, see buying pressure out of it. We'd have an entry somewhere here in a lower time frame, and then price would continue up in the direction we want it to continue up in, right? Again, we are in an uptrend. We go from the swing low to the swing high, correct? And we already know what a high and a low is. We already went over that in one of our videos. I think that was like 3 or 4 the video we made. I forget. I'm not 100% sure. But we already know what high and a low is, right? So again, we go from the swing low to the swing high. When we're in an uptrend, we want to see price dip down into the discounted price range, because that's where you're going to get a cheaper price. Let's go for an example. Let's say you go to what can we use an example on? Let's say you go to like a car dealership or something. You like cars? I like cars. Cool. If you go to a car dealership and you see they have let's go with a GTR, my dream car. Original price is $150,000, right? And you say they have, let's say in some world they have a 50% off deal, right? If you came in trying to buy a GTR and you saw it's a little bit cheaper, you're probably most likely going to buy that car, correct? When it has a 50% off deal. So again, when we're going into discounted price range, that's like getting a percentage off instead of buying it at a more expensive price and getting a worse entry. We're getting it at a discounted price where we're buying it at a cheaper level, so we can get a better entry and make more money when we're trying to go to the take profit of our draw on liquidity or something like that, if that makes sense. Hopefully I explained that well. I think I did. But again, that's what discounted price range is. If we buy it in the premium, let's just say if price never came down and visited the 50% level, we're not going to want to buy it up here, right? This is going to be a more expensive price. Again, price could continue up, but again, that's not going to be waiting patiently and waiting for our continuation confluences to hit. We want to see it go in discounted price range, get it at a cheaper price instead of buying it at a more expensive price. If you go into the dealership and you see that GTR is 15 grand more than what you wanted it from sticker, let's say 15 grand more than sticker price, you're not going to buy that car. You're going to go try and look somewhere else, try and get it cheaper so you can get a better price on it. Again, that's just an example I'm going over here. I'm trying to just put it into your brain what equilibrium does, what we want price to go into discounted price range, show buying pressure at a discounted price range, and then once we see that, we say, hey, this is a good spot to enter, and then bang, we get a better entry for our trade. Cool? That's to the upside, right? So let's go to the downside. And this is going to be a pretty simple video, guys, because again, I just want to go over this in parts so it's more understandable for you guys and girls or whoever's watching, your dog, I don't know. Because again, we're not in a rush to learn trading, right? If you're in a rush to learn trading, you're in the wrong spot. I want you guys to learn patiently, learn things correctly, and learn things step by step so you can go back and back test them each week and learn them. Cool. All right, downtrend. In a downtrend, we move in lower lows and lower highs. Correct? So what we are going to do in a downtrend, we are going to take the GAN box, same thing, but literally the opposite. We're going to go from the swing high to the swing low. Right here, right? Swing high to swing low. So what the difference is here is that when we're in a downtrend, now this is going to be discounted price range. We'll put a D. And this is going to be premium. We'll put a P. Does that look like a P and D? PD. Right there. Discounted premium. Right? You guys see that? Discounted premium. So what we want to see, if we're moving in a downtrend, is we want to see price go into discounted price range. Right? Let's say price comes up, we come into discounted price range, right? And we see selling pressure out of it. Let's say we see a candle closure. Here's my drawing. Yep. That should be a red candle. Pretend this is a red candle. Holy crap, that's terrible. Pretend this is a... Hold on. Excuse me. Let's say we see a candle closure, a bearish candle closure coming out of discounted price range, right? This is a big red candle. Right? So price came up. We got price coming into this area. We ended up getting selling pressure out of it. We get a big candle out of there or just whatever, a bearish candle out of discounted price range coming into premium, closing below the 50% level. That would mean, hey, this is a good time to probably enter, right? Holy cow. This would be a good time to enter. We get a good price instead of buying it all the way down here in premium, and we end up getting a better entry for our trade, targeting our sell side liquidity below. Correct? Right? Because when we see this, guys, oh my gosh. See, the drawing and the typing, not my forte. Gets the patience. Not good. But again, guys, look, we want to see people coming into discounted price range. We want to see selling pressure out of it, identifying to us that, hey, people are getting a discounted price range here. They're pushing the market down after it came into discounted price range. We're going to get in on this move. Once we see a bearish candle closure past the 50% level here below it, we're going to end up entering our trade and going from there because we get a better entry. And if we're in a right trade, right, we expect price is most likely going to continue in a downtrend. So it's going to continue making lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Correct? It's better to get in up here when we're looking for our continuation confluence instead of getting somewhere down here and then price ends up taking out its draw on liquidity and ends up reversing and you get stopped out. Holy crap. What just happened? Okay. And you get stopped out on your trade because you got a terrible entry down here, right? We rather get in at the top when we see our continuation confluence so we get a better entry at discounted price range, and then price will continue down to our take profit and we earn more money because, again, we got in at a better level, right? That's where we want to go. We want to get in at the best level possible for our trade to run, hit our take profit, not get stopped out. Good day for everybody. Everybody makes money, and we go home. All right, but again, identifying it one more time when we're in a downtrend. We go from the swing high to the swing low. So this swing high to that swing low, right? This would be a little bit lower. Equilibrium, price comes above. Whoops. Price comes above. We get selling pressure out of it. If we're scaled down the lower time frame somewhere here, we get our entry. Price continues down. One more time. We see. That just scared the living shit out of me. That's Siri. That's my thing over here. As we can see here, we get from the swing high to the swing low. We don't have a swing high to swing low here, so this would be our next entry right here, swing high to the swing low. Price gets in a discounted price range. Let's say we get a candle closure right here. Bang! Price came in discounted price range. We see selling pressure out of it. Candle closure underneath the 50% level. Here's our entry. Bada bing, bada boom. Stop loss and take profits we'll go over in future videos. Right now we're trying to learn how to identify what equilibrium is. Cool? Hey Siri. Am I the best trader in the world?
Sorry, I don't understand.
You're nice. I'm just kidding. Hey Siri. How you doing today?
I feel good. Thanks for asking.
Yeah, you're welcome. Bitch. Alright. Other than that, that should pretty much go over the basics of equilibrium. I gave you guys my Gambox settings. So again, this is what equilibrium looks like if we are in an uptrend, right? Let's say, let's just X this out again. Let's just say, one more time, guys, we are in an uptrend, right? Equilibrium. And then we'll do our downtrend for our last example. Siri, you need to shush your bush, okay? Okay. And then here's our downtrend. We'll make this red. One last time for you. Again, if it was a little confusing. So, uptrend. I'm going to go on a quick little pause here. If we are in an uptrend, right? Let's say we want to draw out equilibrium. Where would equilibrium be here? Okay? You did it on your screen, right? Awesome. Equilibrium would be from the swing low to the swing high. Right here. Swing low to swing high. Right? Equilibrium, we come in a discounted price range. Move this out of the way. Discounted price range is the bottom one in an uptrend. Premium is the top one. Do we enter a trade if it doesn't come down to discounted price range? No, and we're still going to go over that in the next video. Look, came in a premium, it stayed in premium, we got a little dip down, price continued up, we're not entering. That's based off of emotion. If we don't see a fair value gap fill, equilibrium, Fibonacci, I'm getting ahead of myself again, we'll see that, right? And we're using this off of a continuation confluence, like a breaker block, order block, fair value gap, if we have an S&T, right, again, and then a break structure, there's all the stuff we're going to go over in the future. We're using this as a continuation confluence. You're just not going to mark out equilibrium on the 4-hour time frame, see price dip into it, and then enter, right? We got to use this as a continuation confluence. That's how I use it personally. But again, uptrend, if price came down first, we dipped down in a discounted price range, saw buying pressure out of it, got a candle closure somewhere around here, up here, wherever it is, then we enter. Cool? Right? Downtrend. Last example. Where would equilibrium be here? Yep. Okay. That was good. Alright. If we're looking for equilibrium in a downtrend, downtrend consists of lower highs and lower lows. Our equilibrium would be from the swing high to the swing low. Right? If price doesn't come above the 50% level, because again, discounted price range here is the opposite. Discounted is at the top, premium is at the bottom. Let's say price came down, didn't get into discounted price range, price continues down, wouldn't be an entry. But if price comes up above the 50% level, then we get selling pressure out of it. Let's say we get a candle closure here somewhere. Then we'd end up entering the trade at this area because, again, it came into discounted price range. We got selling pressure out of it, confirming, hey, this trend is most likely going to continue down. Then we enter, and then price will most likely, hopefully, continue down. Again, this is based off probability, but we're using this as a continuation confluence, just not by itself. And we'll go over that in future videos when we go over strategy creation. But tomorrow, we're going to go over how to identify equilibrium in the live charts with the candlesticks and everything like that, and just show you guys how it actually works and how it reacts. Again, we already learned liquidity and fair value gaps and break of structure. I'll probably show some examples tomorrow of just maybe a liquidity sweep, break of structure, and then equilibrium fill, and then price continuing in its direction. So again, wow, this video is still 21 minutes, which is crazy. I thought it was going to be like a 10-minute video, but it's crazy how quick time flies when you do stuff you love. I'm going to make this a little bit bigger, and tomorrow I got to not forget it, because today we won a trade, but I forgot to make my face smaller on the screen over here, and it was covering the whole chart. So yeah, that was on my YouTube Live. I was just talking on my YouTube Live, and people probably thought I was a little bit special. So yeah, other than that, that's video 14. We're almost at video 15. We are at video 15 after I upload this one. That's going to be tomorrow. And then I think we have 15 more videos on top of that to help you guys learn how to trade like I personally trade. Again, I didn't make up these confluences and stuff like that. I'm not the inventor of this stuff. I'll put it out there. A lot of other people teach this stuff on social media. This is just the way I use them, how I identify them, how they work in my brain, right? And I don't know. It works for me. Maybe the way I explain it helps you guys learn it better than someone else explaining it. That's just the way it is. I like getting it out there on social media. I want to help people. And again, if you don't like it, hold on. Let's put it up here. If you don't like the way I trade, you can suck on. I can't say that on YouTube, but you can go fuck yourself. Maybe I'll cut that out. I don't know. I'm just kidding. It's all love here. You guys trade the way you guys trade. But again, don't be hating on my shit. Again, this is the way I trade. It works for me. If you don't like it, move along and everybody will be happy. But other than that, for the people who really do want to learn and watch me trade live in my Discord or on YouTube, you guys see it works. And that's pretty much the proof will be shown in the success of my trades and everything like that. It's not a 100% win strategy. Nobody has a 100% win strategy. It's just what works for me, guys. I use it on a daily basis. I'm still getting better every single day, just like you guys, and I'm going to learn more as time goes on, as I get more experience in the markets. But again, I've been using this stuff for the past 2 years now, and it's what's helped me evolve in my trading, because I've been trading for 6 years. And the 4 years that I first started trading in, I sucked ass at trading, and now for the past 2 years, these things have helped me a lot more. Okay? Cool. Appreciate everybody who's liked and subscribed. Sorry if I swear once in a while and it offends you. Again, I need to work on that. I'll work on that for you guys and girls. So other than that, thank you guys. I love doing this every single day. We'll get that next educational video out tomorrow. We trade live tomorrow at 9:30 a.m. Eastern time every single day. Discord's free. YouTube's free. I don't charge anyone for anything yet. Maybe in the future. We will see once we get there. But again, I think I need to prove that I am a better trader first before we end up doing that. But again, I don't know. Like and subscribe. Thank you guys.